Welcome to Passive Investors Playbook. I'm your host, Charlie Hardage. In each episode, we'll sit down with successful people that turn to real estate to build and grow their wealth. We do a deep dive into why they chose real estate and what makes it so attractive to them. We explore why people in their industry could also benefit from passively investing in real estate. Whether you're a beginner or an experienced investor, a doctor or a professional athlete, love your job or hate your job, our show is here to help you build a profitable real estate portfolio while maximizing your free time and minimizing stress. So sit back, relax, and get ready to learn from some of the best in the business. Welcome to Passive Investors Playbook.
My name is Marcus Ogden, the owner of Ogden Ventures, LLC, a speaking, coaching, consulting business that helps real estate investors rise and elevate to the next level. We are a proud sponsor of the Passive Investors Playbook, a show that helps individuals learn about real estate investing, knowledge to help them gain wealth in investing in real estate to grow their portfolio. To contact Ogden Ventures LLC, go to our website, www.marcus.ogden.com, or email us at marcus@marcusogden.com. Get in touch with us today. We'd love to speak with you. And again, we are a proud sponsor of the Passive Investors Playbook Show, a show that helps people understand and gain knowledge around real estate investing.
Thank you for tuning in today. My name is Charlie Hardage, and I'm the host of the Passive Investors Playbook. Our show is focused on people that were successful in their careers prior to getting into real estate. Today, I have the pleasure and honor of speaking with Brandon Jenkins. Brandon is a former engineer in the oil and gas industry, developer, and full-time real estate investor. He is the principal of Birch Prosper and the host of the Capital Stack podcast. Brandon resides in the Washington, D.C. area with his beautiful wife and 3 children. In 2014, he started investing in single-family homes. In 2019, he pivoted and started passively investing in multifamily properties. He currently has a total of 13 properties with over 2,600 units. I'm honored to call Brandon my friend. Brandon, thank you so much for being here today. I'm really excited to have you. Can you tell the audience a little bit more about yourself?
Sure can, man. Thanks, Charlie. It's my pleasure and honor to be here. And like you mentioned, you and I have become really good friends. And I really appreciate that we've kind of grown in this space and helped each other bounce ideas off of one another and things. And so, like you mentioned, started in investing back in 2014. I was a petroleum engineer at the time. So I worked as what's called a drilling engineer. And so if you've ever seen like oil rigs, whether they're onshore or offshore, I've done both. And some really good work at the time. And then I worked as a reservoir engineer after that, and then an asset engineer. But one of the things that I saw in the business is how volatile it is. You know, it's not, there's some businesses that are not tied to a commodity where you have relative stability there. But when you're tied to a commodity that tends to float up and down with geopolitics and everything else, then it can be, it can be a bit difficult to achieve stability in your career. So for me, I wanted to offset some of that and started to buy rental properties, fix them up, rent them out, rinse and repeat, the Verb method. And so, yeah, that's kind of how I got my start. Initially, it started off as almost a necessity to offset risk, and then I wanted to scale up. So I went from the single family space to now the multifamily space, and haven't looked back. So that's kind of that's the long and short of kind of my story, but we'd love to dig into any aspects of it further.
That's great. So oil and gas, very volatile, like you said. And so in order to kind of offset the volatility, you got into real estate. Why'd you get into real estate as opposed to maybe another side business or a part-time job, or why real estate?
So I had an interest in building wealth. I always have, but I never really had any direct guidance in kind of my, my personal life. I never had anyone to say, do these things. Here's the blueprint, so to speak. So I began exploring, hey, how can you win at this money game? And I actually started off with sort of an interest in the credit crisis. I was in school at the time. I was in grad school when the credit crisis hit, and so I didn't really feel it. And at the point, I was kind of like, well, what's this all about? Why is everyone saying that the sky's falling? But it's because I was a student, so I didn't feel it. But so I started to kind of research it, and then research the stock market, the bond market, research all these different ways. The Forex market, at one point, I was looking at that. So I started looking at ways that you can build equity, and eventually, one of my college buddies, he actually flipped properties not too far outside of Houston, where I lived at the time. And I went out there, kind of saw his operation. And he drove me around the neighborhood and said, yep, I own that property, this property. And I was almost immediately hooked. So I started to read, started to dig into, podcasts. Like back then it was a Bigger Pockets podcast. So I started to kind of pour into information and, find out about it. And I just fell in love with real estate because of the level of control, the 5, big benefits of investing in real estate: income, depreciation, appreciation, leverage, right? And so equity buildup. So that's what attracted me to real estate. And that's kind of what got me started down this path.
Wow, that's awesome. It kind of seems similar to my story. I think this is probably 10, 12 years ago. I would go on the Forbes, top, 500 list of all the ultra wealthy, and would kind of go down that list and see how they made their wealth. And, you have the Waltons, the Walmart family on there. You have a lot of oil and gas. You have Mark Zuckerberg and Bill Gates. And, a lot of those guys that I never thought I was going to create this phenomenal product like Microsoft or Facebook, never going to, know the stock market or get into oil and gas. And one of the things that I noticed actually is that a lot of the wealthy people that did not create a product or a service were in real estate. And so that kind of started my journey into real estate. And my family growing up had a couple single family homes. They were house hacking before that was a term. But then when I was born, they sold all that and really never got into real estate again. They owned a REIT. I think that apartment complex actually burnt down, or part of it burnt down. And so they maybe got insurance money, and that was the last that they did. And so it's very nice. Like you, Brandon, I did not have a mentor that said, hey, this is why you need to do real estate. It was a lot of kind of self-discovery for me. And obviously I wish I could have gone back in time and, learn more about it. But Bigger Pockets for me was very instrumental too. And, one of the problems with Bigger Pockets, in my opinion, and it's not Bigger Pockets issue, it's my issue, was the shiny object syndrome of seeing, oh, I could wholesale, oh, I could flip, oh, I could, single family or mobile homes, whatever it is. And there was just hundreds of different ways to invest, which is one of the reasons I love real estate. But they all had that one thing in common that you mentioned, and it's building wealth. And so I knew real estate was what I wanted to do. I didn't know how to do it. And so we took kind of a similar path. And it's great that you had I think you said college roommate that was in the game. Did your roommate become kind of like a mentor to you, or let's talk about that. He showed you kind of what he did, but then what kind of turned you on to real estate more?
Yeah, that's a good question. And so that is what he essentially became. He's one of those guys that was really very business savvy, at the time, even though it was more or less a one-man show for him. And so, but he was also an analytical guy. So I graduated, he and I both graduated with the chemical engineering degree. So he really had kind of the understanding of the numbers and how to break down a process into its components and then reassemble it into something that looks, shiny and pretty. And so he was able to kind of mentor me through some of that early stuff, like understanding the numbers, understanding, and actually the first properties that I bought were in the same market where he was flipping homes. So he actually connected me to people, which I think that's, something that more people need to do, is, leverage your network to grow your network. So that's kind of what I did. He said, hey, listen, I know an agent that can help you, that's comfortable working with investors. I know a general contractor, I know an inspector. And so it went from there. So he was able to say, look, here are the numbers that, at least in his space, as a house flipper, that he paid attention to. And then I was able to, through my research and self-education, kind of, add those to my repertoire on the rental side. And so that's kind of how I was able to grow. Yeah.
That's awesome. It's funny because I think in real estate, you could flip a home, or your buddy could flip a home, or someone could flip a home. Yeah, there's competition, but at the end of the day, it seems like everyone kind of has that abundance mindset in real estate. Whereas in the corporate world, if I come up with an idea, someone wants to claim it or wants to hold me back because maybe they're threatened. And so I really like that in the real estate space, especially in multifamily syndication. You can't close on a 100-unit property by yourself, right?
Right.
Maybe you can, but you can't run it efficiently. It's hard to raise the capital. Someone that's been doing this a long, long time, maybe they can do it, but they don't, right? And so I love that aspect of the the abundance mindset in real estate. There's a lot of people willing to help. And so it's great that you kind of had a mentor to show you the ropes and introduce you to people. I love that you said leverage your network. I kind of want to pivot a little bit and kind of talk about mindset as well, because when I was trying to get into real estate, it was, I like your friend, I'm very analytical. I was doing the numbers, and that's kind of where it would stop because my network was terrible. What did you, and my mindset was not there either. What were some of the things maybe that you did, or how did your mindset change?
So I tried to, fairly early on, I tried to seek out other groups that were local to Houston, to where I lived, that were also investing in real estate. And it was kind of a mixed bag. And to be honest, I had some that were not so great, where they were overly pitchy. But then I did have some, experiences with meetups in the Houston area that, they were really spot on. They were helpful. They were, all the things that you need in a mentorship group. And so, so for me, that was essential for shifting my mindset, because I was I made it so that I kind of got around people who were successful at what I was trying to do. And then also when I started to see the results of it, after I bought my first couple properties, and I started to get sort of my systems built up to where I would, I found an agent that was really good with investors, to where he I could pretty much show him my deal analyzer, and he would kind of take a quick stab at a property and say, okay, here's what I think. And, so we had a really good system going. So once I started the results, my mindset started to shift even more, right? So initially it was, get the education, get around people who are doing what you want to do. That helped on my mindset set. But then also, as I saw the results, it really started to help me shift into saying, okay, this really works. But I would say that without the former, I never would have had the latter, right? So without that initial adjustment and trying to get around people who were successful, I wouldn't have had the results. And so, I needed that initial trigger to change my mindset.
Man, that's awesome. I admire you, because I think I had the education with podcasts, with real estate forums like Bigger Pockets, just learning as much as I could. And the one piece that you didn't even mention that you did immediately or quickly that I did not do for a long time was you took action. And so I think that's what a lot of people, get the education or go to meetups and all that, but then they're either risk averse or they sit on the sidelines. And it looks like you took that huge step of taking action. And you don't see results unless you take action. And so I didn't see results for years because I didn't take any action. So that's amazing that you got educated, with the meetups and your own learning podcast, all that. And then you took action, and then you saw the results. So once you saw the results, I'm sure you were hooked.
Yeah, absolutely. And I appreciate you for saying that, because you're right. It's that's kind of the one of the messages that I really put out there is it's great to learn. You have to make sure you have the fundamentals, but the ultimately action is really what's going to get you to where you want to go. I can't tell you how many meetups and things I went to where there were always people there who they knew the ins and outs of the investing game, but they didn't take that step, or they were overly cautious to where they wanted to have, they wanted to have their structure all set up and everything else before they really had a property, and so it ended up kind of being a hindrance. And those things are important, but it can also slow you down if you're not careful. So actually, ultimately, that's if to me, what I tell people is, look, if you are risk averse, then you and I were syndicators, and so I like to tell them, hey, listen, if you are risk averse, then you mitigate that risk by partnering with someone who has the experience level. Yep. So to me, that's a great way to do it. But otherwise, you can kind of maybe go to a market where the pain, so to speak, is a little bit less, and it's not like a high price point market or something like that. There are ways to make it easier to take that action. But yes, I was definitely hooked after that, because after I bought the first one and I started to see the income from that property, I got the second one, I started to see the cumulative income there, and it just kept going. I just fell in love with it. I don't know anyone who's bought one property and stopped. I only know people who got that first one and got hooked. So that I definitely fell into that category.
Yeah. Okay. So that was 2014. You started investing in single family homes. You got up to 12 homes. I'd assume you're buying 1, 2, 3 a year.
Yeah, because I ended up. I think it was really between 2014 and 2017 or so. So yeah, I got, I picked up the pace really quickly. The first two, took about almost a year, and after that, I just sprinted.
That's awesome. So then in 2019, a few years ago, you pivoted. You got into multifamily. I know you're in 13 deals, over 2,600 units. That's phenomenal, especially in such a short time. Why'd you make that transition to multifamily after being, getting a nice steady income from single family?
Yeah, for me, it was the economies of scale. I really enjoyed the single family space, but I started to realize that, I put in a fair amount of work for that one transaction you get. And so, and also vacancy, I had, if I had 2 properties that were not filled, I felt that. And so it didn't take long for me to sit down and start to look at the numbers and say, well, gee, if I could get a, 20 unit, 50 unit, 100 unit, then I've mitigated vacancy risk.
Yeah.
And so, and I wanted to increase the velocity of my capital. And it also became very apparent to me that, like you mentioned, it's a team sport. And so if I build a good solid team and then rely on the team to get the job done, make sure that we all are on the same page, then it's not as if that when you scale up from 1 door to 100 doors, you're doing 100 times the work. Right. For me, those were the things that said, okay, I need to make the shift. And then the more I found out about the multifamily investing and the advantages of it, I really started to fall in love with it. I mean, for me, there was just no looking back. And this is even outside of just economies of scale, things like, and I'm sure we're going to get into it, but forced appreciation and so to me, those were the things that really started to appeal to me, in addition to helping improve the community. If you have one property, you might be doing something to help the community a little bit, but I really liked it. You are impacting a community because your customers living in your property. So you have a direct impact on them, a positive one.
Yeah, I definitely agree with that. And one of the benefits of apartments, in my opinion, is, you still get all the benefits of real estate. You get the depreciation, the appreciation, equity buildup, all that. But then you also get bonus depreciation. Potentially, you get the kind of sense of satisfaction with building a community, having a nice, safe place to live for the tenants and a lot of others. And I know you mentioned forced appreciation. I'd kind of love to get into that because I'm very familiar with that term as a syndicator myself, but love to kind of do a deep dive in that because one of the really great things about commercial properties, and apartments fall under the commercial property realm, in a single family home, the way you force appreciation is really based on maybe adding a deck or a extra
Yeah.
bedroom, flipping renovating the kitchen, or different things like that, where it's a lot of work potentially to change the property. At the end of the day, that's kind of where it stops. With apartments, because it's commercial property, it's based on NOI, or net operating income. Do you want to maybe talk about what NOI does, how you and your team forces appreciation?
Sure. I mean, it's in that. So for me, forced appreciation is kind of the secret sauce behind the multifamily, especially the value add game. And so ways to boost NOI, kind of what we look at. First of all, is things like curb appeal. If you think about it, even from yourself as the potential tenant or customer, what are the things that for you that you are willing to pay more for, and that you're willing to say, this is home, and I really love it here. So it's things like curb appeal. When you walk up, you want to, if you're driving up to your apartment and your parking lot is all jacked up and there are abandoned cars in there, and the paint's all, stripped up and it's cracked and all this kind of thing, then you're less likely to value that the same way as you would with the property that has those things cleaned up and fixed. What about clear signage? What about, modern, nice looking signage? What about the exterior, the paint, the leasing office, the gym, if you have one, amenities. So these are the things that we look at. What does this particular tenant look for in this market? Because that's another piece, right? You want to have something in the market that they're not looking for. But what does the tenant look for in this market? And then how can we add value? So even things like adding a pergola, sometimes we'll look at that. On the interior, we'll look at things like adding obviously flooring, cabinetry, countertops, the usual paint, appliances. So those are just a kind of a small handful of the things that we look for when we're trying to force appreciation. And on the topic of NOI, if you think about it, if you're in a market where you have where it's a 5 cap and you increase the NOI by just $50,000 a year, then you've increased the value of the property by $1 million. And so that's the secret sauce behind forced appreciation. That's why I love this business so much. That's why we love, this business. So that's kind of a quick little summary of how we look to add value and force appreciation in our deals.
Yeah, that's awesome. The other thing too is reducing or removing some expenses, and that also boosts the NOI, which in turn boosts the value of the property. And so Brandon and his team, and what I do as well, is we go in there and we try to run it more like a business than just a property. And so maybe there's ways to reduce expenses, like getting extra bids on landscaping or different things like that, where you can go in, get a reduced bill for the same amount of work or whatever that would be, and then you're increasing the NOI, you're reducing the operating expenses, which in turns boosts the NOI and boosts the value of the property. Yeah. So that's another, I love what you said, Brandon, the secret sauce of apartments, and I agree with that, because you can still go in there and, as you mentioned, update a kitchen, cabinets, flooring, paint, all that. You can make the grounds look better too. And one of the benefits of that is actually having the tenants kind of take more pride of not ownership, but living there in community. And in turn, they'll stay there longer. They'll pick up trash or maybe not pick up trash, but they'll, maybe not park their cars there, or not let other people dump a sofa in the dumpster that doesn't live there. So there's a lot of different benefits of adding value. And the way I kind of see it is it's a win-win-win. It's a win for us as owners. It's a win for the passive investors, and it's also a win for the tenants. And if you can't do one thing and upset one group of people, because then you're not going to get more deals, and you might not get the returns that you projected, but at the same time you could upset the tenants and they leave. And so you gotta, it's a win-win-win.
Yeah. It really is. I like to tell people that it's a people business.
Right.
And it's one of those, it's one of those things where your partners, the people who work with you to help you get the deal done and manage the deal. It's about the relationships that you've built with them. It's about the relationships that you build with your investors to understand what they're looking for, to understand how you need to effectively communicate with them. And then it's a relationship between it may not be, as an asset manager and an owner, it might not be directly relationship with you and the tenants, in terms of face to face, but it's certainly with the way that you manage the asset and operate, that builds the relationship for them. And you're right, it also builds kind of what you call stickiness, to where they really enjoy where they live. And again, like I said, for me, I try to put myself in the shoes of the renter and of my property. It's like, what do I like? What's going to make me stay here? What would I like to see the management do that will build a sense of community here? And so that's what we strive for.
That's awesome. So I know you mentioned a few, I'm going to call it 5 pillars of what makes real estate so attractive to you. You mentioned leverage, equity buildup, depreciation, appreciation, cash flow. And then you also mentioned something about building wealth. Can you kind of talk about maybe why, like the building wealth piece, kind of talk about that a little bit more, of why that is so attractive to you?
Absolutely. So for me, one of the best ways that I can sort of summarize this is through my children and my wife. So we have 3 kids, and one of the things that I tell my kids, but they're very young, so they might not fully internalize it yet. But one thing that we talk about is giving them options. Being able to provide for them the freedom and the space to pursue the things that they want. Like that, for me, that concept is so powerful. And even at a broader perspective, kind of making a positive impact is something that if you build wealth that you can actually do, it can help you be a giver at a scale that is difficult to do if you don't have the wealth to support that. But for me, it's again, for my family, I look at my kids and they sort of give us purpose, right? And so I want to be able to afford them options to travel however they want to. I want them to, pursue their passions in life without having the burden of, because if you think about it, if the average person's experience is to say, I want to pursue this passion, but if it's not lucrative enough, then I have to sort of back down on what I'm passionate about. And then I'll try maybe option B. Is this one lucrative? No. Okay, well, I'll go to option C. And so we end up sort of in this situation where rather than truly pursuing our passions, we end up kind of finding this match between, what we sort of kind of like and what's the most lucrative. Yep. And so for me, I actually don't want that model for my kids. I want them to be able to say, I'm passionate about this, so that's the direction I'm going in, because I have the financial support and acumen, because I'm going to show them how to do this as well, to do that. And so that's kind of why wealth is important for me. And of course, generational wealth, so even beyond just our children.
Man, that's amazing. And I kind of see myself in that too. As you know, I have a 10-year-old, and I want her to be able to do whatever she wants, whenever she wants, for a job and a career. And if that's following in my footsteps of real estate, awesome. But I know it's probably not. So and that's okay. I want to be able to leave a legacy. And it's funny too, because I talk to a lot of investors, a lot of my passive investors that kind of would echo that sentiment. Some of them love their jobs, but they don't make enough. And so they want to augment their income by passively investing. They don't have the time, they don't have the experience, but maybe they have the money, or maybe they can't stand their job and they want a way out. Talked to someone a while ago that actually really liked his job, but wanted to do something else and kind of create his own business. But he wanted that stability of that passive income. So he doesn't have to worry about being able to open up his business when the time's right. He'll be able to open up his business, because worst case, if everything fails, he still has that passive income and some investments coming in. So I love what you said. I think, you think that way. I think that way. A lot of people think that way too. And maybe we just don't talk about it enough because maybe it's taboo. I don't know.
Yeah, and and I think that's unfortunate too, that because you're right, it is. I do believe it is taboo. Look, just think about okay, so if you're having a conversation with someone, or maybe not now, because I believe we've sort of um, our mindset has shifted. But if you think about it in the past, if you get around people at work and they talk about their financial hardship, everyone chimes in, right? And it's okay. So say, man, I don't have any money. I just want to get through the week and pay these bills and da da da. Da. People it's almost like people like talking about that, but it's certainly at the very least it's acceptable. The minute you start to talk about wealth and you start to talk about, hey, I invested this and these were the kind of returns I got and I'm building wealth, and people are going to shun you. So I think we've sort of been yeah, like I said, it is unfortunate that it's taboo. I think that people sometimes misconstrue it as bragging, and I can tell you that for the people that you and I that we've sort of been around that are doing really really well financially, they talk about it openly, and there's no bragging going on. It usually is in the form of sharing. It's usually in the form of talking about the impact that they can make. Their philanthropic efforts. So yeah, it does appear to be it's taboo. I don't think it should be. I think that it should be something that is more openly discussed, because it would help more people understand the abundance mindset that's required to win in this in the money game. I mean, so in the wealth game.
Yeah, totally agree with that. And I think, you do have some, you kind of hit on this. It seems like there are some people that want you to succeed and want you to do well and want to partner with you. And then you have some others that maybe say, oh, well, real estate's, it's not worth it. It's too risky. Maybe they just don't know. And then you have others that don't want you to succeed, because if you succeed, then you might not be their friend or be the same brand and be the same person that they're expecting. And I don't know if it's jealousy, I don't know if it's just if it's something else, but that took me a long time to kind of figure out on my own as well, because I've been a huge proponent of real estate for years and years and years. And one of the reasons, and this is probably more of an excuse, but one of the reasons I didn't take action is because I kind of felt alone. No one else wanted to do it with me, or just heard a lot of negativity. And you mentioned it earlier in our conversations about the meetups and being around like-minded people. And that really just kind of let you probably take off and put some air under your wings. And then, you took action and you saw the results. But if you never took action, you never would have seen the results. And we wouldn't be having this conversation today. So I definitely agree with what you said. So let's kind of talk about, I know you were an engineer in oil and gas for many, many years, and you actually are a full-time real estate investor today. What do you think allowed you to make that jump from having a W-2, trading your time for money, to now leaving your job and going real estate full time?
Well, for me, I think it's actually partially what you mentioned earlier, which is getting around people who are doing really well and who are successful in the space, because then that also opened opportunities to me in terms of investing in deals as a passive investor, which then ultimately led to me being on the active side. But you mentioned it earlier, that being a limited partner, being a passive investor in these deals, it really can help you sort of step into a different bracket, so to speak, and start to really see the real results and returns from these deals. And so that's kind of what allowed me to step into this space full time. And then also having a clear vision, because that's the other piece that I think is just very, very important in this, because there are a lot of people who have enough coming in passively from these deals, when you come look at the the contributions and the payouts and things, to where they could stop working, but in some cases they just like what they do, and obviously that's perfectly fine. But in some cases they would exit and do this full time, but they don't have the vision to say, well, so if I do leave my job, then what? And that's one thing that for me has been instrumental, is I have a very clear vision of where I want to go. And I know that this is the path that will get me there. And so that's what helped me say, okay, well, you know what, this is actually what I'm going to do full time, and start to kind of plan out. Well, before that, planned it out, but start to take steps on that, take action on the plan to getting to that point.
Yeah, that's great. I having a clear vision is something I didn't establish for a long time, and I think part of that. What I had to go through is changing my mindset, doing a bunch of personal development, reading lots of books, podcasts, all that. What type of maybe personal development and mindset changes have you had over the last, 5 years or so, few years?
Absolutely, I'll share that with you. I want to make one quick point though about vision. And I like to talk about something as simple as Legos. Right, this sounds very silly, but I like to talk about that because if you think about it, whether you're an adult or a child, when someone breaks out the Legos, we all get excited. And I think that one of the reasons we get excited is because we have a vision of what we want to build. This is even if you get one of those little packs that let's say that it's a Star Wars Lego build where it's, you build the Millennium Falcon or something like that. I don't know. But most of us, when the Legos come out, we decide we're going to build something else. And we get excited as soon as they come out because we think, well, you know what? I have a vision of what I want to build. And that end result looks really awesome. So it's a very simple example, but for me, that's one thing that sort of conveys why, having a vision is important, but also it can be exciting. So the mindset, one thing that's changed for me, you know what, I'll tell you something that changed. A couple of years ago, I remember looking at my calendar. I like to tell this story because it's really for me, it made a huge impact. The bottom line is you can tell pretty quickly what someone's priorities are based on what their calendar is. And so at that point, I told myself, hey, I want to be an active investor. I want to be a syndicator. And I knew that was what I wanted to be. But my calendar was empty. I mean, I didn't have any calls. I didn't have any conferences. I didn't have any virtual meetups in there. This was before I had a podcast. So I didn't have anything at all. And so I stopped and said, wait a minute. This is where the problem is. I need to fill this thing up. And so that was what I set out to do. And within a relatively short amount of time, my network expanded, my level of activity in the space, exponentially grew. So for me, that was a key step change in my mindset, was realizing that I need to take action to spend the time doing the things that I want to do that are going to get me to where my goal to my goal.
Man, that's amazing. And I know now your calendar's full because you have the meetup. If you're in the Washington, D.C. area, hit up Brandon. He has a monthly meetup. Check out his podcast, Capital Stack, which I think you release that weekly. Is that correct?
Yeah, that's correct. Yeah. We release it every Friday.
Okay. Yeah. That's amazing. And I'm sure now looking back, you're like, wow, why was I that way? But it just takes time. It takes that personal development. Sometimes you just don't know what you don't know. And now I think your podcast has been on the air about a year or so, and it's phenomenal. Definitely check that out. A lot of growth has taken place, I think, for both of us over the last few years. Yeah, and it's great to see.
Thanks. And sorry, I'll say too, I think you're right. It's that not to bash anyone who's kind of in their process of growing. It's because you're right. You said it. I look back and I say, wow, how did I not do this sooner? But the truth is, you're right. It takes time, and that's okay. I think that the main thing is for people though to stop and realize where they are and where they want to be, and realize the gap. That for me is the important part.
Right. Yeah, that's awesome. I heard a quote a couple years ago that I still love, and it's something like, "Why are you on the dance floor? Get in the balcony." And that to me is, that was me. I was on the dance, and I'm a terrible dancer, but I was on the dance floor, and I was always looking at, having to fix the problem, putting out all the fires. And then if I were to get in the balcony, I could see all the fires. I could see all the people dancing. And so that would really kind of help me and help my vision even figure out, okay, what do we need to tackle first? Is this fire really a fire, or do I just think it's a fire? And so I think if you take a step back, I don't care how busy you are, take a step back and kind of evaluate what your goals are, you will start getting that vision. We'll get a little bit more clarity. It might not be clear from day one, but that will help you kind of get off the dance floor and oversee what needs to be fixed. So I know I know you invested in some passive deals. Let's talk about those. I don't know if there's a deal in particular you kind of wanted to highlight, but what did you enjoy about the passive returns and passive deals?
I really liked I really enjoyed the passive deals. I'll tell you that. So part of the reason why I've been a limited partner on 11 deals, a passive investor on 11 deals, is because I enjoyed it so much. Because so for me, my goal, like I mentioned earlier, was it's always been to get to the active side, and so I wanted to understand kind of how syndicators communicate, kind of what to expect. I wanted to be able to have sort of my returns, my investment tied to someone who is experienced. And those are the benefits of being a passive investor. You don't, it's completely hands off. And so you are being, your returns are basically coming from, find someone, a sponsor that like, and trust. That's essential. Understand somewhat of kind of the market that you're investing in. You want to understand the fundamentals there. But I think that being a passive investor is just incredible because you can get, these returns from distributions and then from the payouts on these deals. You get the full benefits of the things we mentioned earlier, the income depreciation, appreciation, leverage, equity buildup. You get all these things and you don't have to worry about tenants, toilets and telephone calls, or tenants, toilets and termites, whatever it is. And so you don't have to worry about any of those things. In fact, in my meetup, that's one thing that I share with people. I always have this image. I do one of two things. I either have an image of a couple that's on a beach, and I put like this little thought cloud of all the things that the active partner has to worry about, and I cross them all out because as a passive investor, you don't have to worry about any of those things. And then but another slide that I like to show sometimes is an example of two photos of people who are on the beach. One guy's not having a good time at all, and he's sunburned, and he's yelling because he's in pain. And this other couple who is having a wonderful time on the beach. And I like to say that all passive investors are not created equal. And so being a passive investor is wonderful, but you also need to make sure that you get with the right sponsor. So what I've enjoyed, I can tell you the first two deals that I got into as an LP, the first one doubled my capital. The first one doubled my capital, and the second one was like an 80% return, and they were both sold within 26 months. I mean, so, and obviously that those are, I'm not saying that those are standard results, but I got excited, right? And hence the 11 deals. But so those are some experiences that I really enjoyed about.
Wow. So in one of those, you doubled your money in 26 months.
Yeah.
That's a phenomenal return. Was that underwritten for 5 years? I know that's normally how we underwrite, but was that underwritten for 5 years?
Yeah, so they had a 5-year hold in the plan, but the way they did theirs was interesting because they underwrote it for 10 years. What I mean is it was a 5-year hold, but they wanted to make sure that in the unlikely event that we had to hold the deal for 10 years, it would still make sense. Okay. Despite obviously the core plan was a 5-year, it was a 3 to 5 year. But so yeah, that's the kind of the long and short of it. So I thought that was really unusual, but in a good way, because they wanted to make sure that it could hold up over the long term if they had to hold it.
Wow, that's incredible. So double your money in 26 months, and then did you reinvest that pretty much immediately?
I sure did. Yeah, I sure did.
That's awesome. Yeah, that's great. So okay, being an engineer by trade and by profession, how do you think that helped you become an LP and then move to the general partner side?
So it helped me in a number of ways. One is deal analysis. I'm a spreadsheet junkie.
Yes, you are. Yes, you
are. So for me, that was huge because I've always liked to look at the numbers and understand sensitivity analyses and this kind of thing. So that it helped me there because that's what I did all day on the job. The other thing is a drilling engineer, for people who might not know, just to summarize it, the drilling engineer in an oil and gas drilling project is sort of the focal point for it. And so you have to understand, what the type of rig is that you're using. You need to understand the capabilities of the rig, how much weight it can hold. You got to understand which drill bit you're using, which drilling fluid you're using, what cement type makes sense. All these things, what the geology, of the rock that you're drilling through is. You have to understand the target. But what's interesting is and you use all of these different groups to get the job done. You have a sub, your wellhead company, your blowout preventer company. You got all these different companies you're using. You're not an expert in any one of those businesses, but you understand enough to make sure that the job gets done properly while using each of those elements and those team members. So that's one thing that really, really helped me in this space, is because I think a lot of people struggle with digging in deep on the how. Like, I have to understand how all of this works, from every single piece of it. But I think that can sometimes slow you down. So for me, what's helped me is making sure I knew who to tap into and who the right experts are in this business, and then say, hey, look, here's my plan. Here's what success looks like. Let's talk about executing this plan. So that's the approach that I've taken, and my professional experience has kind of helped me in that regard. That's
great. How do you think let's pretend that you're talking to another engineer in the oil and gas industry. What would you tell them about kind of the benefits of a passive investment, and maybe give some insights on any conversations you've had with some former colleagues in that regard?
What I like to tell them is, I remember a long time ago when I was on a drilling rig out in California, and one of the company man, he's a drilling manager, or the on-site manager. He kind of told me, hey, you'll never leave the oil and gas business because of the people. And he was right. Now, the people in that business, for me, that I've come across, they've been really, really good people, hardworking, very open, willing to share, so I really enjoyed that business. So what I like to tell people who are in the oil and gas space is, listen, you get to continue doing what you love, but then you get a buffer between sort of the volatility that I mentioned earlier.
Yeah.
And so that your livelihood is not directly tied to that one income stream. I tell everyone, I don't care what business you're in, you need to have multiple streams of income.
Right.
And
especially in oil and gas.
Especially in oil and gas.
Yeah.
And it's like, oh, by the way, you can pick up the phone, or you can email or send a text to the sponsor, right? So the person who's the manager of the deal, you can call them, say, listen, this monthly report doesn't look right. Let's talk about it. And you can't do that for very many other types of investments. You can't call your mutual fund manager. Right? So I like to tell them that. And the other thing is, oil and gas, as we know, has a lot of turnover. So there are a lot of sort of abandoned 401ks out there. And you can put those to work and take control of your financial future. So I like to tell them that as well. So
that's great. All right. So we got a few minutes left in the show. Let's talk about what is a recent book that you've read that really stands out?
Who Not How.
Yeah.
I kind of hinted at that a little bit too a minute ago, but it's Who Not How, for me, that's an amazing book, because it really teaches, or taught me, to rely on people who can help me get to where we can mutually help each other, but I'm helping them by adding value and helping them get to where they want to, or to learn a skill that they want, and they're adding value to my mission by doing the same. And so it's a really great manual, essentially, on how to get buy-in from people so that you can both sort of achieve a goal together, and spend less time working on trying to figure out the how and figure out the who to help you get there.
Yeah, that's a great book. I should have read that a long time ago, but I ended up reading it last year. All right, so what can people expect to see from you and your business, your brand, over the next few years?
So we are looking for growth. We're continuing to find deals, and so we're value add investors. And so we continue to find deals in markets that make sense for our investors, and to where we can add return. We typically look to kind of double our investors' capital during our hold period is what we generally look for. So that's what you can look for from Birch Prosper, is continued growth. We want to get to the point where we are acquiring about 1,000 doors a year. And if the growth continues to scale from there, then we'll follow that. But that's kind of what my current target is, and that's where the company is headed.
That's awesome. You go from 12 single families in 5 years to $1,000 a year. That's incredible. All right, how can people reach out to you if they want to talk?
Sure. So my email address is brandon.jenkins, that's BRANDON.Jenkins at Birch Prosper. That's at BIRCHPROSPER.com. I'm also on LinkedIn. Now, Brandon Jenkins is a very common name. So I'm not sure how to even help with that. I guess we'll put
your link in the show notes.
There we go. And also, I'm on Instagram. It's at Birch_Prosper, and also the Capital Stack. I have some links in the show notes on my Capital Stack episodes, and so I would love to to have you check that out and leave any reviews if you hear something you like.
Sounds great. And then, what's the best website for you?
Birchprosper.com.
Awesome, Brandon. This has been a real pleasure speaking with you today. I know the listeners got a lot out of it. Thank you for being on the show. Hope you have a great day.
Absolutely. Thanks, Charlie. Always a pleasure.
Thank you for listening to today's show, brought to you by H&K Investment Group, your home for passive investing. If you want to learn more about how you can invest with us, please check out our website at hkigllc.com. Don't forget to like this episode and subscribe to our podcast. Please leave us a review to let us know how we are doing. Feel free to connect with me directly on LinkedIn or Facebook. As always, I'm your host, Charlie Hardage. Catch you next time.